All right. Cielo Del Rosario CDR, your real estate resource. Today, have the wonderful opportunity to be accompanied with Kevin Sliker over at Movement Mortgage. Thanks for being here, Kevin. Really quickly, I was wondering if you could go ahead and give a brief introduction of yourself, Movement Mortgage, and what specific individuals or areas that you cover.
Okay, sounds good. So yeah, my name is Kevin Sliker. I'm a licensed loan officer with Movement Mortgage. Currently licensed in Oregon, Washington, Idaho, and California. Been in the business for about 4.5, 5 years now, and been with Movement for probably 2.5 of those.
Awesome. Great to hear. And I
Mhm.
remember first getting into real estate, there was a lot of what they call real estate jargon thrown out, I guess, things like due diligence, earnest money, and one of them was loan officer or lender. Like, what the heck is that?
Yeah.
So why would it be more beneficial? Because this was a question that came up the other day, actually, with somebody who is first starting their process into purchasing a home was like, what is a lender, right? So, and they were thinking to first go to a bank like a Chase or a Wells Fargo or things of those nature. So
Mhm.
why would it be more beneficial to go with like a movement mortgage or a lender, and then briefly explain like what a loan officer is too?
Sure, sure. Yeah. So we can kind of touch on all that. The differences between lenders is kind of what I'm hearing is like the first question, the banks versus maybe retail shops like myself and then brokers. So a bank is always going to give you the best loan product
Hmm.
that they have, right? A retail or broker lender is going to give you the best product for you. So a prime example would be like government loan programs, FHA, VA. There's a lot of banks and credit unions that do not have those products in-house. And so I'm not saying that they would try to sway you into a conventional mortgage or something like that, but the product suite is not as extensive or exhaustive. So that's why I work at Movement Mortgage and not a bank. There are a bunch of different people out there with different setups financially, whether you own your own business, whether you have multiple rental properties, like what have you. So you want to have, as a service provider, you want to have options for your clients. And so that's why I think the direct lender like myself, and we can broker as well. I think that allows you to be more nimble and just better serve your people.
Right. The big banks they have different products. However, working with somebody like yourself have the more, I guess, what is it?
Flexibility.
Yeah, flexibility or defined toward each situation and client. Gotcha.
Yeah, and it's important to remember too, not to, bash on big banks, but it's like they're a depository institution first. They're a bank. Lending in home loans and what other, ancillary services that they provide, that's all like a value add to you opening up a checking account. So for us, our economies of scale are 100% set up to lend on a home. So that's all we do. Our attention is not diverted to any other thing. It's kind of like when you get car insurance and then that insurance agent's asking you about your life insurance policies, right? It's kind of like that. With us, it's 100% home loans. And again, our systems are set up to do that. And we do it very, very well.
Awesome. And so the biggest trending topic in real estate at the moment is interest rates. Everyone's talking about interest rates.
Yeah.
Interest rates are super high. And that's
Yep.
pretty much what you're doing all the time. And
Hmm.
interest rates, despite being super high,
Hmm.
people are still purchasing homes, and some tactics that not everyone may know about the regular person include an assumable loan mortgage, right? Or assumable loan. I was wondering if you could briefly talk about that in most basic terms for everyone to understand here.
Yeah. A simple way to understand it is you're looking at a home, you want to buy it, and for whatever reason, you're not interested in getting financed yourself. So what you're going to do is you're going to go to the seller and you're going to say, hey, I'll just take over that mortgage for you. I'll take the mortgage, put it into my name. I'll make the monthly payments and everything like that. And the reason why that's advantageous right now is because for the sellers, who have a mortgage down in the 2.75 interest rate range or 3.25 interest rate. That's a really good rate. So your payment's pretty much going to be better if you can assume the loan. But there's no such thing as a free lunch, right? There's always a caveat. So what you're getting in terms of the mortgage, the difference between what's owed on that current mortgage and the value of the home, you have to bring in the difference, right? Because the sellers aren't just going to give you the free. So a simple example, I have a house, you want to assume my mortgage. Let's say my home is worth 400,000 and I owe half that on my mortgage. So my mortgage is 200,000, my home's worth 4. So yeah, absolutely, buyer. I will help you take my 200,000 mortgage, not a problem. But you need to give me 200,000 cash to make up the difference. So assumable loans have that catch, and it sounds great, and in theory it is, but it really depends on how much cash you really have to play around with that. And I think overall, it's always worth a look, but in my mind, just statistically, like Americans right now have really good equity positions in their homes. So that being said, you're probably going to have to come up with a lot of cash to assume somebody's mortgage right now, So that's kind of the downside to the assumption of a mortgage. You can assume FHA, VA, you can even assume USDA. You cannot assume conventional loans though.
Gotcha. Okay, that's very interesting.
Yeah.
Right. And that's just one of the tactics towards purchasing a home right now. There are many other different ways, but that's just something that doesn't come up too often. Like, oh, I can do that. But like you said, however, you do have to come, no lunch is free.
Right.
You're going to have to come up with that extra cash somehow. Awesome. All right. Also, really quickly, wanted to cover some other strategies of purchasing homes. For example, the home equity line of credit. You're the expert on this stuff, also known as a HELOC. What the heck is a HELOC?
Right. So a HELOC is a home equity line of credit. So if you have a good enough equity position in your home, you can borrow against that money. And a home equity line of credit is something that is utilized to do like renovations on your home or purchase another home. But really the HELOC, you'd always want to kind of have an exit strategy on that. Different lenders have different HELOC programs, so it's important to understand what you're doing. Some are interest rates where they're fixed. Some have interest rates where they're variable. Some have interest-only payments. Some do not. Some are allowed on primary residences only. Some are allowed on investment properties. And depending on your equity position and that loan-to-value ratio, that will drive how much you can borrow, right? So again, HELOCs for me are something that I just err on the side of caution with, only because I know how people are. It's like if you have it, you'll probably use it. And I think for savvy investors, they understand HELOCs, they know how to use them to the maximum potential, and they do. But to the average bear, to the average homeowner, I would be just a little leery about it, only because I see so many credit applications come through. I see so many mortgage applications come through, and people generally don't understand credit. And they really don't understand how to get out of debt. And a HELOC can really pigeonhole you into a bad position, right? So that's my number one thing is like, what's your exit strategy on the HELOC? But aside from that, yeah, absolutely awesome tool. And with everybody's equity position right now, it's probably doable. Movement has a HELOC program, so shameless plug. We just rolled that out. So it was really for our our past clients and stuff like that. And then now it's open to everybody. So I think it's fast. You would apply in like 5 minutes, you basically get the approval or not. And then you get your money in like 7 to 14 days. So pretty quick. Yeah, no appraisal.
It can be very tempting knowing that you have, I don't know, you've been in a home for 10 years and knowing that you have $200,000 of equity, like, I can access this right now and use it. So
yeah. It's like sometimes I just see people do stupid stuff. Like they'll pull money from the HELOC, which is at a higher interest rate than their student loans. So they'll pull from the HELOC to pay off their student loans. And I'm like, I don't get it. Right. And then there's other times where people will pull out money from a HELOC and they'll buy like a fifth wheel or a boat or an RV. And I'm like, okay, like, I mean, do what you want. But to me, that's the dumbest thing in the world. It's like, that's not going to make you money. If you're pulling out money from a HELOC to purchase another property or to reinvest in your own home, like you're going to renovate a kitchen or a bathroom, I'm all for that. Yeah. But Yeah.
Right.
Again, yeah, it's like a
Uh-huh.
lot of what I do it errs on the side of financial advisory kind of stuff with
Yep.
people's credit.
Mhm.
Real big lack of financial literacy there.
That's the biggest thing that I find. It is tempting to go ahead and purchase a boat or a T or
Hmm.
a five wheeler. However, the biggest utilization of that, or at least that I have heard of, is going ahead and, like you're talking about, savvy investors investing it into something that's going to produce a return.
Right, right. Yep.
Awesome. Okay. And
Hmm.
other than purchasing and selling, what are some other ways to utilize a lender?
So lenders can help with purchasing a home. They can also help with refinancing a home. So there's generally two types of refinances where you would either do a rate and term refinance, it's called. That is to lower the interest rate on your mortgage. Basically, you just want to get better terms. Anybody that's purchased in the last like 6 months, right? Their interest rate is probably in the 6 to 7% interest rate range. So if we go into this time next year and rates are 4 or 5%, I guarantee those people are going to be taking advantage of a rate and term refinance. Just lower the rate, which ultimately lowers their monthly payment. So you could be saving a couple $100 a month on your mortgage, and that's fantastic. The other refinance would be cash out. So again, for those people who with solid equity positions, when rates were in the low threes, it wasn't really costly to do a cash out refinance. So some people would do a cash out refinance of like 100,000. So they refinance their mortgage, they get 100K, and now they have a new mortgage wrapped up in a bow of 3% interest rate. So again, higher interest rates, not super advantageous right now to do a cash out refinance, but it's there. I think though the best way to utilize a lender is to think of them less as an order taker who's just going to be like, yeah, here's your mortgage and here's your payment, and think of them more as somebody who's like a debt consolidation specialist, if you will, because a mortgage is the biggest debt obligation of your life. So it's super important that we manage that. But we also can see all your other debts. We can see your auto loans, we can see your student loans, we can see medical debts, we can see everything. So if you were kind of swimming in debts and you did own a home and you did have equity in that home, a good lender will be able to restructure your life in such a way that overall your monthly debt obligations have come down, you've saved money in interest, and you're just kind of better set up in terms of net worth and financial security. So
Awesome. And I'm sure there's going to be a lot of questions and people reaching out from that. Oh, wow, I can utilize them more than just buying or selling a home. So that's
for sure.
fantastic.
Mm-hmm. Yeah.
Cool. Thank you for sharing one of this today. Hopefully that was resourceful for everybody. What ways can people get in contact with you? YouTube, social media, number, all of that good stuff.
Yeah. Yeah. So you can follow me on social media. I hate saying that, it's so corny. But I am on YouTube now. I've been doing more videos and stuff. It's really just to try to educate people. I think like a lot of folks, my generation specifically, they're not in the know. And that's why they're uncomfortable with the process. I see it with a lot of first-time home buyers. They're really nervous about buying a home, and they're really nervous about what that all entails. And for me, it's like if you knew what I knew, you wouldn't be nervous at all. So I try to use my YouTube platform as like an educational sort of classroom. I try to do like whiteboard videos and stuff like that. You can do vlog, you can watch my vlog videos and follow me around like day in the
Love it.
life kind of stuff. But yeah, if anybody wanted to reach out, Cell is best, 908-285-5182. You can call or text, and you'll get me, not some assistant or somebody on my team.
Awesome. Love it, Kevin. Thanks for
Mhm.
sharing. Thank you for your time. I'll go ahead and put your information down below.
Awesome.
Otherwise, I appreciate you for being here and
Mhm.
see you next time.
Cool. Thanks, buddy.
All right.